Yes, everyone. Good evening. Today I want to talk about the SoFi. SoFi, guys, today bounces when you see my technical here. Today, when market everything bounces, remember SoFi was very bearish. It's been long time since I talk about SoFi because he had a lot of weakness. And today, when Fed guys was dovish, shows that SoFi and the rest of the market stock is going to move forward. And this is what I see, guys. On my technical SoFi here, you see SoFi was very bearish. Even right now, I'm not saying it's bullish. You can see tomorrow, but by next week, it's going to be. I think it is the right time to buy now because market has already given us a hint that it's going to raise, it's going to pounce. So, guys, let's buy before moving above $8. So between $7 right now and 30 something cents. That's where you can buy. Even me, I'm planning to buy for long term. After so when I saw the weakness, guys, I saw silver before it was going to drop less than uh, less than $4. But right now, Fed has already give BEF. It's not hawkish right now. It's dovish, and before I move forward, so I want to play a video that I found right now. You can listen it. So you see the charts, guys. When weekly is very weak, daily is weak, and everything is going to change. And let's hear this video.
I said, which is that people just feel that after the great run, and it was a great run, after the really terrific outlook you gave, after the stock was moving up, that you yourself hurt the stock and it went down big. And people feel badly that they bought it at 9, only to find out that, well, something was wrong at SoFi. Yeah, I think it's important to understand why we did the convertible deals, why we did the buyback, and the benefits to shareholders that I don't think are truly understood by the market. Well, this is your chance. The first point is we did this deal from a position of strength. We just had a record 2023, over $2.1 billion of revenue, up over 30%, 40% growth in our members, our first quarter of GAAP profitability, over $400 million of EBITDA generation, and gave an outlook that was going to be for full year positive GAAP profitability in 2024, as well as continued strong growth in our tech platform, as well as our financial services business. And we're going to be more cautious on the personal loan business. What we saw was an opportunity from that position of strength was to lower our cost of debt. We had two pieces of debt that were quite expensive. One we did in 2019. It is a Series 1 preferred that pays 12.5% interest. 5 years after I issue it, we can buy it back in May. If we don't buy it back in May, we'll have to not just pay 12.5% interest, but actually goes up to 15% interest for the next 5 years, and we can't buy it. Okay, so in other words, it wasn't like you could play around. If you tried to think that maybe it would go to 12 and we got to May, you would have, and it didn't go to 12, you could have been hurt. It was not like the risk was, hey, listen, it could go up to 20 here. It was the opposite, which is that you had to get this piece done. Well, I would put it this way. We saw it as an opportunity to do it and have a negligible impact on our GAAP earnings per share, and also combined with a buyback, have it be accretive. But did you think the stock was going to get crushed like this? Let me finish. Have it be accretive to tangible book value per share by 8 to 10%. Okay. When you do a convertible, there is pressure on the stock from investors shorting the stock against the convertible to delta hedge. That does happen. So there is typically 5 to 10% decline. But the reason why we did it is really important, because I think this is why we'll put some momentum back into the stock. First is we had this 12.5% debt. We also had another piece of debt that's about $500 million that we pay 7% on. So we're going to save between $40 and $60 million of interest expense a year by refinancing from 12.5% down to 1.25% where the convert is, and from 7% down to 1.25%.
Don't miss a second of Mad Money. Follow at Jim Cramer on X.
So guys, thank you so much for watching. And here the company is already paying they are going to pay, or they already paid debt, which is the bullish on the company. You hear the CEO talking, or CEO was talking, and that was the bullish, guys. Even for me, I want to take this opportunity before this stock breaking $10. Let's buy the dip. Uh, the stock is going to be benefited in next 2 years. Instead, chasing AI like Nvidia right now, I can say opportunity in Tesla, SoFi, which has been beaten, and other small cap stock, which is going to be profited in next 2 to 5 years. We need to buy when still cheap. Guys, that's my advice for right now. So maybe probably tomorrow we are going to see, but next week we are going to see more breakouts. So tomorrow maybe can pull back or not, but next week everything is going to organize the uptrend movement.